Everyone panicked. That is the plain, unglamorous truth of what just happened. Silver got knocked down hard, a fast and ugly flush, and a whole crowd of people who owned it looked at the red on their screen and hit the sell button. They got out. And now, a short stretch later, silver has clawed its way back above 60, and the people who did not flinch, the ones who simply held, are already sitting on the recovery. So the story writes itself, does it not? The holders won, the panickers lost. End of video. Except that is not the lesson. And if you stop there, you will make the exact same mistake the next time it happens, because it will happen again. If you own silver right now, this is about you directly, so stay with me. Because here is what I am actually going to show you. The people who panicked and the people who held were very often the same kind of person. Same information, same instincts, same read on where this is all going. The only thing that separated the winner from the loser was one decision made on one bad afternoon. And by the end of this, you are going to know which of those two groups you are standing in. And more importantly, how to make sure that when the next shakeout comes, and it will, you are standing in the right one on purpose instead of by luck. And there is one thing that separated the winners from the losers in the last great metals bull market this country ever lived through. It was not brains, it was not luck, it was not some secret piece of information the winners had and the losers did not. I am saving it for the end because it is the single thing the people who just shook you out are counting on you never to figure out. Stay to the finish and you will have it, and you will never look at a red screen the same way again. Let me take you back, because this is not theory. It happened, in America, to ordinary savers, and a lot of you watching me lived through the front end of it. Go back to the 1970s. The dollar had just been cut loose from gold. For a generation, an ounce of gold had been fixed by law, a fact you could set your watch by. And then, almost overnight, it was not. The price started to move for the first time in most people's adult lives, and a certain kind of person understood, in their gut, what that meant. It meant the ground under their savings had turned to water. And two men I want you to picture both understood it at exactly the same moment. The first man was a machinist. The second was a schoolteacher. They did not know each other, but they may as well have been the same person. Both of them watched the price of a loaf of bread and a tank of gas climb month after month. Both of them did the math on their own kitchen tables and did not like the answer. And both of them, quietly, without telling the guys at work because they would have been laughed out of the room, put a chunk of their savings into gold and silver while it was still climbing out of the low numbers. They were early, they were right, and for a while, they felt like the smartest men in their neighborhoods. Then came the middle of that decade, and this is the part that matters more than the beginning or the end, because the great 70s bull market, the one that took gold from $35 all the way up over $800, did not go up in a straight line. Right in the middle of it, right when both men had started to feel clever, the metal did not glide higher. It fell. It fell by roughly 40%. Nearly half of everything they had made evaporated over a stretch that felt like it would never, ever end. And here is the cruel part, the part that makes no sense until you've lived it. The inflation they had bet on kept right on raging the whole time the metal was falling. They were being proven correct about the disease and punished on the treatment at the very same moment. The newspapers called it a fad that had finally broken. Their brothers-in-law told them they had been suckered. And both men sat at their kitchen tables with a statement in their hands, and the statement said, in cold numbers, "You are a fool." Same drawdown, same headlines, same brother-in-law, same gnawing feeling at 2 in the morning. Everything about their situation was identical. And right there, in that valley, the two men did two different things. The schoolteacher held. The machinist sold. And that one afternoon, that one decision made in the worst part of the worst stretch is the entire difference between the man who was around at the end to watch $35 become $800 and the man who took his 40% loss, locked it in forever, and spent the rest of the climb watching from the sidewalk, telling himself he had dodged a bullet. He had not dodged a bullet. He had shot himself with it. Now, hold both of those men in your mind, because we are coming back to them. And the thing I promised you at the top, the one thing that separated them, is the thing that decided which chair they are sitting in today. Let me bring you back to right now, because you are living the small version of exactly what they lived. Here's the picture in plain terms, and the daily tick does not matter. The shape does. Silver just came through a hard shakeout. It got knocked down into the mid-50s, its lowest in the better part of a year, a fast, vicious flush, off more than a tenth of its value in a matter of weeks. If you own it, you felt that in your stomach, and I am not going to sit here and pretend it was fun. And then it snapped back. It reclaimed 60, it recovered much of the drop, and it did it while leading gold on the way up, which is a detail worth holding on to. Gold, for its part, barely flinched through the whole episode, pulled back only modestly, and has since rallied back over 4,100 to a multi-week high, calm as you like. And that gap, gold's little wobble against silver's violent swing, tells you everything about which metal the crowd panics in. Silver is the emotional one. Silver is where the shaking happens. So who did the shaking? Because this did not come out of nowhere. And if you want to be in the right group next time, you have to understand the machine that runs this play, and you have to know who is operating it. It is not a mystery, and it is not the fundamentals. The fundamentals never changed. China did not stop draining physical silver during the flush, not for a single day. The structural deficit, the fact that the world has burned more silver than it has dug for 6 straight years running, did not reverse itself on a bad afternoon. The mines did not suddenly find a new ocean of metal. None of the real things moved. What moved was the paper. Understand this, because it is the whole game. The price of silver is not set by the metal. It is set in paper markets, in contracts that can be sold by the truckload in seconds, by people who will never touch an ounce, never take delivery, never hold a coin in their hand. And when the macro wind shifts, when the Federal Reserve under Kevin Warsh turns hawkish and starts talking about a rate hike instead of a cut, that paper crowd sells, because metal pays no interest, and they are chasing the next tick, not the next decade. That selling drives the screen price down, and the falling screen price does something to the human being watching it that has nothing to do with silver and everything to do with fear. It reaches into your chest and it squeezes. That is the machine. Wall Street moves the paper, the financial channels amplify the fear, the number on your screen turns red, and they wait. They are counting on you to do the machinist's thing. They are counting on you to hand them your metal at the bottom. And I have to stop right here and talk to you directly, because this is the exact moment where a real decision sits, and it is the moment they are hoping you make it badly. If you are sitting on $100,000 or more in a retirement account, a 401k, an IRA, anything you spent a working life filling, then a shakeout like this one is precisely where the difference between owning the real thing and owning a paper promise on it becomes the whole ballgame. Because the person who owns metal outright can sit through a 40% drawdown and do nothing. The person who owns it on leverage or owns a claim someone else controls can be forced out at the worst possible moment, whether they want to be or not. That is why I put together a free retirement protection guide. It walks through, in plain English, how some retirees are moving a portion of their savings into physical gold and silver without triggering taxes or penalties, held inside the tax-advantaged account they already have, metal they actually own, rather than a number on somebody else's screen. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. And if you go through it and want to talk it over, there is a free, no-obligation, one-on-one educational session for folks with $100,000 or more in any retirement account. No pressure, nothing to buy, just answers. All right, back to the two groups, because now I want to show you why the holders are not just lucky. Here is what almost nobody points out, and it is the heart of this. The reason the people who held are already recovering is not that they were braver or smarter or that they had some crystal ball. It is that the real thing never actually broke. Think about who kept buying while the paper crowd was dumping. China kept pulling record physical silver right through the flush because the people who move the most metal on Earth were not reading the same fear the retail seller was reading. The official sector kept stacking gold. The industrial buyers, the solar makers and the electronics manufacturers who cannot design silver out of their products overnight, kept needing the metal at any price the screen showed them. The people who trade silver flinched. The people who own silver did not. And the recovery, when it came, rewarded exactly the group that refused to sell into the fear. That is not luck. That is the physical market reasserting itself over the paper market, which is a thing that has happened over and over and will happen again, and it always rewards the same group. So let me ask you the question this whole thing is really about. Which one are you? Because right now, having watched the flush and the bounce, It is very easy to say, oh, I am a holder. I would never sell the bottom. Everybody says that, watching a chart in the calm after. The machinist would have said it too, right up until the afternoon he did not. The truth is, you do not find out which group you are in when things are green. You find out at 2 in the morning, in the middle of a 40% drawdown, when the newspaper says fad, and your brother-in-law says told you so, and the number on the screen says fool. That is the only moment the question is real. And the difference between the school teacher and the machinist was never courage in that moment, because courage runs out. It was something they decided long before that moment ever arrived. And that is the thing I promised you, and we are almost there. But here is the part that actually changes things, and almost nobody gets to it. So let me shift gears and be blunt with you. You have been sold a story your whole investing life that the winners are the smart ones, the ones who called the top, timed the bottom, saw it coming. It is a flattering story, and it is mostly a lie. In the metal, over a long cycle, the winners are almost never the smartest people in the room. They are the most stubborn. They are the ones who set their lives up so that the market could not reach into their chest and squeeze hard enough to make them sell. The school teacher was not smarter than the machinist. Years later, he told his own kids he was not brave either. He said he was just too stubborn and too well set up to be forced out at the bottom. And stubborn, it turned out, was enough. That is the uncomfortable truth Wall Street will never put on a screen. Because if you understood that holding was a structural choice and not a personality trait, they could never shake you out again. Now, before I close the loop, I owe you the honest limit of all this, because the people on the other side of this argument, the pure bulls, they will hand you a number and a promise, and you should trust them exactly as little as you trust the panic sellers. Yes, there is a real bull case here. A growing number of analysts make the case for triple-digit silver, and some banks sketch bull scenarios running well up into the hundreds if that structural deficit keeps widening, and the stretched gold-to-silver ratio keeps compressing back toward levels it has actually visited in history. Those are real arguments, built on real mechanics, and at the far speculative edge, there are voices calling for numbers so large they only make sense in a full monetary reset, and those deserve real skepticism. The bigger the number, the more skepticism they have earned. But I am not here to hand you a target, because I cannot promise you a price and I cannot promise you a date. And the second anyone does either one, you should close their video and never come back. Silver is the most violent major metal there is. It overshoots wildly up and just as wildly down. You just watched it flush into the mid-50s and snap back above 60 in a matter of days, and it can turn around into the ugly version just as fast. It could fall back below where it just bounced from. It could stay cheap for longer than you think you can stand. A few good days off the lows is not a confirmation of anything, and the hawkish Fed risk has not gone anywhere. Being right and being early feel exactly the same while you are holding through the pain, and only one of them ever pays you. In the short run, the price answers to the Fed and the dollar and fear, not to the deficit. The shortage is the trend, the Fed is the weather. And the weather can soak you for a long time before the trend ever shows up. Which is exactly why the thing I have been promising you matters more than any target ever could. Here it is. The one thing that separated the school teacher from the machinist was not what they knew, because they knew the same things. It was not how brave they were, because bravery is a candle and a long drawdown is a hurricane. It was how they had set it up beforehand. The school teacher owned his metal outright, free and clear, sized so that even a 40% fall could not force him to sell to pay a bill. So when the valley came, panic could knock on his door all it wanted, but it could not get in because nothing about his life required him to answer it. The machinist had stretched, had leaned on it too hard, so that when the drawdown hit, the fall was not just painful, it was dangerous to him, and a frightened man who is also exposed will always, always sell. He did not lose because he lacked conviction. He lost because he had built a position that made conviction impossible. That is the whole thing. Panic is not what turns a temporary loss into a permanent one. Selling is. And whether you sell is decided not in the moment of fear, but in the quiet beforehand, by how you built the position. Which means which group you end up in is not your fate. It is your choice, and you make it now, while it is calm, not later, while it is red. So here is what to actually do with your own position, and this is not advice. It is just how a calm person thinks it through. First, own the metal, not a promise. The entire difference between the survivors and the wiped out in the 70s was whether they held the real thing or a leveraged claim someone else could yank away at the worst moment. Second, Size it so a 40% drawdown cannot force your hand. If a fall like the one those two men lived through would force you to sell at the bottom to cover a bill, then your position is too big, no matter how right the thesis is, because being forced to sell in the valley is how right people still lose everything. And third, never, ever sell into the shakeout. The shakeout is the machine that transfers metal from the people who feel to the people who own. Decide right now that you will not be the fuel. If you are on your TV, the QR code is on your screen one more time. If you are on your phone or your computer, go to jeffreedguide.com. It costs you nothing to be informed, and the honest reason to look now is not fake urgency. It is the plain fact that the time to think a decision like this through calmly, the time to build the kind of position that panic cannot reach, is exactly when nothing feels urgent, which is right now, not the afternoon everyone else is hitting the sell button. And for those of you who stayed with me all the way to the end, here is something just for you. If you have $100,000 or more in any retirement account, and you mention that you watched this full video, you can claim a free, one-on-one, no-obligation educational web conference. A real conversation about what you actually own versus what you only think you own, no pressure and nothing to buy. That is for the folks at that level who made it all the way here, and you are one of them. So could this video sit under some other title? No. You came to find out whether the ones who held are already right, and here is the honest answer. Yes, they are already recovering, and no, that is not because they were smarter or braver than the ones who folded. It is because they built a position that let them do the one thing that wins in the end, which is nothing. They held because they had made holding possible before the storm arrived. The ones who panicked were very often the same people, right about the very same things, undone by a single afternoon and a position they had built too big to survive it. And those two men at their kitchen tables, the schoolteacher and the machinist, both holding a statement that said fool. One of them is why we still tell this story, and one of them is the warning inside it. The metal ran from $35 to $800, and only one of them was still standing to see it. The shakeouts will keep coming. Nobody can promise you a price or a date, and anybody who does is not on your side. But the choice the schoolteacher made, long before the valley, is the only sure thing in this entire video. Do not just be right. Build your position so that when everyone around you panics, you are not able to join them, and you will be the one who was already right all along.